Building influence is something anyone can learn. It's an investment you can make in yourself, and it can hold the keys to achieving your dreams and having the life and impact you want to have. I'm Laura Cox Kaplan. I've learned a lot over 3 decades about building and sustaining influence and how using it effectively can make a big difference in your life and career. Here on She Said podcast, we're digging into the different dimensions that help us build and sustain influence. If you thought being an influencer was just for social media, think again. Whether you're starting a business, raising money for a cause, negotiating a promotion, running your household, or trying to connect with those who don't share your views, understanding and using the different dimensions of influence will increase your chances of success, whatever your goals may be. Listening to She Said podcast is a smart, efficient investment you can make in you. I'm really glad you're here, and I'm excited we're on this journey together. Hey friend, welcome to She Said podcast. I am so glad that you're here. As summer continues to wind down, I am continuing to go back through some of our past episodes to pull some nuggets and perspectives that I think deserve some additional airtime. I hope that you are enjoying this little trip down memory lane and that you're finding some great material to inspire you in these last few days of summer as we look toward fall. I know you will have a full plate just like I will, so I hope that you're getting some time away and that you're using this content from She Said podcast to really fuel and inspire you as you jump back into things. This week's Encore conversation is a great one to add to your list. Carrie Colbert is my guest, and she is the founder of Houston, Texas-based Curate Capital. That is a venture capital fund that Carrie created to invest in women-owned companies and to help them accelerate their growth and to give others an opportunity to invest in these companies as well. Now, Carrie joined me earlier this year as part of our collaboration series with the Southern Curate Network. I have loved this collaboration and these conversations with incredible entrepreneurs like Carrie, and of course, last week's Encore conversation with accessory designer Lily Saduki. But I also hope that you will check out all of the other conversations as part of this series as well. They are all fantastic. But of course, whether entrepreneurship is your thing or not, you will undoubtedly learn a lot from these incredible women, including how they navigated through some pretty major career pivots. As I have thought about this conversation today with Carrie, a couple of observations come to mind. Every decision that we make and every action that we take gives us an opportunity to really build or to leverage our influence. That's true in how we engage with others, but it's also true as it relates to things like where we spend and invest our money. And as women, we often have more buying power and more potential for impact through our pocketbooks than we sometimes realize. This is one of the reasons why I especially love showcasing female entrepreneurs and business owners. It's why I talk about them not only on this podcast, but also on my social media as well. And it's why I like giving them some additional exposure on this platform. Now, before I jump into today's conversation with Carrie, there are a few things that I think you'll really appreciate and that I want to highlight. First is her career pivot story, which is fascinating. She traded in the world of oil and gas investment for an Instagram influencer side hustle. And then she parlayed both of those things into building Curate Capital. As part of that, Carrie talks about how she figured out what was next. This is a question that I hear from so many people. How do you know If you're not sure what you want to do next, how do you figure that out? And Carrie shares some great perspective on that question. She also shares some great perspective on investing 101 and a few things that you should know about being an accredited investor. And it's not as complicated as we sometimes make it out to be. Carrie and I also talk about what she looks for from businesses who pitch her for funding. All of those topics and lots more. So, friend, here is my Encore conversation with Curate Capital founder, Carrie Colbert. Carrie, welcome to She Said, She Said.
Thank you, Laura. So nice to be here with you.
Well, I'm delighted to have you. I have been looking so forward to this conversation. This conversation, as you know, is part of our collaboration series that we're doing with the Southern Coterie. And I'm really happy to have you here and talk about your journey. You've had a very unique, a really incredibly unique journey in how you got to where you are. Let's talk about Curate Capital, what that is, and how you started it.
Sure. Curate Capital is a venture capital fund that invests in businesses by women for women. Specifically, we invest in consumer brands that women want to buy for themselves and their families.
Let's talk about how you got started.
Sure. So I actually had the idea for Curate Capital in 2019. And actually, I always remember our legal documents are dated December 2019, and we were all set to launch officially in early 2020. But then, of course, the world changed. So we really only launched in earnest in 2021, but it was a long time coming. So I don't really come from a traditional VC background at all. I'm from a small town in the Texas Panhandle, and I was the first in my family to go to college. And so early on, all my decisions were just very practical and pragmatic in nature. It wasn't a question of, gosh, what am I passionate about? I just had to choose what was going to, get the most scholarships in college and then get me a job that paid well afterwards. So I studied petroleum engineering in undergrad and graduated at the top of my class, and then came to work in Houston in the energy industry. While I was working, I also got my MBA. And I was fortunate the vast majority of my career was spent at a very entrepreneurial company. And so I worked in that industry for almost 20 years. And while I was never passionate about the industry itself, I was just so blessed to work for a guy. I worked directly for the founder of this company who's now a billionaire, but he ran and structured the company in such an entrepreneurial way. It was very engaging as an employee because everyone was so motivated to work in the same direction. So I saw the power of ownership and equity. I saw the power of open book management. I saw the power of aligning incentives within an organization. And all of those things really inspired what I'm doing today. But I got to a point in that career where, frankly, I was just kind of burned out. And so I retired, quote unquote, in my late 30s from that career, from that industry. And I wasn't certain what was going to be next. I just knew that I wanted it to be something entrepreneurial in nature and something that was a bit more in line with my personal interests and passions. And so, long story short, I started connecting with brands that I liked on Instagram. Whether they followed me or I followed them, the founders and I would strike up conversations. And I slowly started investing my own money. Basically, everything I had made for my first career, I invested back into female founded brands that I personally liked. And I did that for about 5 years before I ever thought of launching a fund. But really, three important things happened during that. I was kind of testing my own, idea without even knowing it. But the three important things that happened were: one, I was having great fun in my professional life, and that wasn't a word that I would have used to describe my previous career. Two, I was seeing great results. I saw that with a little bit of investment of capital, these companies were really able to scale and generate returns for me. And then three, I had great deal flow. And what I mean by that is I saw so many opportunities and I had so many women reaching out for funding. I saw so many women building incredible businesses. I knew that this opportunity set was so much bigger than what I could personally handle. And so that's when I just started to start a fund. And so I did so pretty naively, even though I had my MBA and I was, director of finance and worked with private equity and all that. Venture capital was still new to me, and so I had a steep learning curve. The first learning curve was fundraising. I had never really been in a sales position, and so raising money was something completely new and daunting and scary to me. And we set out to raise $10 million for our first fund. And gosh, there were days and weeks and months. I didn't know if we were going to get there, but ultimately we surpassed that goal by 50%, raising $15 million to invest in female founded companies. Now, while it's great that we surpassed our goal, what thrills me even more personally is how we did it. We ended up with over 80% of our investors being women, which is really unheard of in this industry. Even though there are other female focused funds, most of them are backed by, the same corporations and men and institutions as everything else. Not that there's anything wrong with that, but it is a differentiating point for us is that as we invest in these female founded businesses, our investors are ready to support those brands, and not just our investors, but our larger community. Women want to support other women, and we're glad to provide a way to do that both financially and otherwise.
I love that, but I'd love for you to really dig in a little bit deeper and tell listeners about how you created that, because it is very unusual to see a disproportionate number of women. Were you recruiting them? Were you sort of actively modeling this and people were attracted? What was different about what you were doing than what other people have and are currently doing as it relates to attracting female investors?
Sure. I'd love to say that it was some big master, plan of mine from the beginning. And certainly I had a goal of having a lot of women investors, but like many things in life, sometimes it happens when one door shuts, you open another door that turns out to be better, right? And in my very naive brain, when I started fundraising, I thought, oh, we'll just raise a little small $10 million fund because that'll be easy. I will just go out to the people from my oil and gas network, and they'll give me $500,000 here, $1 million here, and so on and so forth. Now, of course, when I reference my oil and gas network, we're talking about mostly men. And while a
Mostly
few of
men, yeah.
them, yep, did get the value proposition, I got to tell you that I faced a lot of pushback, a lot of pushback. And we could say, gosh, we're in 2023 now. Surely that's changed. It's 2021 when I was fundraising. But the fact of the matter is that in a lot of cases, there's still a lot of, kind of old school thinking and sentiment there. A few anecdotal pieces of evidence. I had people ask me questions such as, gosh, Carrie, are there really that many businesses that women start to do a whole fund around them? So that was one. And then another gentleman who I admire greatly in many ways, he cautioned me. He said, Carrie, I think you're really going to turn off a lot of people with this female focus. You're going to lose out on a lot of
Wow.
investors. And he said, so I'd caution you against that. And like I said, I value his wisdom in a lot of other areas. But for me, this just makes a good business sense. And the fact of the matter is that women businesses are underfunded, yet they're overperforming. And I have somewhat of an inside track through relationships with a lot of female founders. And so that just means that we're going to be able to drive outsized returns. We're going to be able to deliver really good outcomes for our investors. So, whether or not you believe in the cause of investing in women, and I think it's the right thing to do. I mean, they're severely underfunded. Beyond that, it just makes good business sense, right? So that's, whether you look at it from a money mindset or a just kind of a cause perspective, it makes sense all around.
Yeah, I'm curious as to whether you've heard back from that mentor since he gave you that quote unquote advice to hear what he thinks about what you're doing now.
Yes, he's been very kind with his praise and credited me with the vision I had. But yeah, I
Yeah.
mean, there are still people who have kind of old school mindsets and are resistant to change, whether it's conscious or not. I think that yeah, it's just kind of embedded into some people, and so we have to push through that. And so to answer your question a bit more fully, so I thought that it was going to be really easy, and I just reached out to these mostly men from my oil and gas network, and we just raised $10 million real quickly. Well, when those doors were shutting, or I wasn't getting answers, or I was getting no's, I was just kind of talking about what I was doing on Instagram, and not even explicitly selling or fundraising, because you really can't do that from a legal perspective. But I was just talking about, hey, we just invested in this business, and this is what they do. Or I would talk about how women got less than 2% of venture capital money in the U.S. And so as I just kind of naturally talked about my life and what I was doing, I had women reach out, DMs on Instagram and so on and so forth, saying, I really get this, or, oh gosh, I'm a customer of that brand. I had no idea that I could invest in it too. And so, yeah, sign me up. Where do I sign? Where do I send the money? And so women I had never met, were investing anywhere from $25,000 to 250,000, or in one case, over $1 million, because they got it so innately. They understood the value proposition and wanted to be a part of what we were doing.
One question I have is, were these women who were already investing, they were active investors, or were they women who were like, I've never really thought about this. I've never thought about, investing my money in a female founded company like this. I
Yeah.
suspect for the folks listening, there's a mixed bag of people that maybe are active investors or those that are kind of maybe mystified by the process. What does it take to invest in a fund like yours? Let's break this down. And I'd love for you to answer the question
Yes.
about sort of who those those female investors were. And then let's talk about what does it take for somebody who's listening who wants to invest in a fund like yours?
Yes. So the cool thing about this, not only do we have about 80% women, over or about two-thirds of our investors are first-time venture capital investors. And so as I went along this journey, that became a huge passion and kind of secondary mission of mine, is just educating more women and more people about what is investing, what is venture capital, how does it work? Because I have a strong belief that knowledge is power, and we've got a certain segment of the population who have reserved a lot of the power for themselves because they've had a lot of the knowledge. And even myself, with an MBA and having led finance at a big corporation, even I didn't know that much about venture capital. But when you really look into it, it's not that complicated. But those select few who have kind of been in the game forever talk about it in a lot of jargon and terms that maybe aren't easy to understand. And so, a big mission of mine is, hey, let's break down the jargon. Let's talk about it in normal terms and make it more approachable and accessible so that people can evaluate whether or not it makes sense for them. And it may not be something that everyone's interested in. That's totally fine. But if you understand, then you can make an informed decision. You have to understand the rules of the game and know how to play the game before you can win at the game, right?
Absolutely. Let's talk a little bit about tolerance for risk. As you think about female investors and taking those risks with their money, maybe what advice do you have for the best ways to think about and evaluating deals in the venture
hmm
space?
Yeah, sure. So one thing that I learned in my oil and gas days, is this: don't put all your eggs in one basket, right? We had the opportunity to invest in oil and gas deals. As our company would buy new properties every month, they would offer that to employees, and we had the chance to put our personal money in. And that's really how I kind of grew my net worth. And I remember one of the executives would stand up at the meetings every month and say, you know, this investing advice: put eggs in every basket, don't put all your eggs in one basket. And that's really what a VC fund does for you. You'll see plenty of opportunities these days. You can invest directly in companies, but what a VC fund does for you is you can rest assured that we are doing the work behind the scenes to vet these deals, making sure that everything's in shape on the accounting and legal side and finance and operational. We're doing all that to kind of de-risk your investment. Plus, you're getting a portfolio of companies. Like, to date, we've invested in 15 companies in our first fund. And so, while not all of those may be winners, you've got a higher chance of something being a big winner, right? And so that's one way, is if you can invest in a fund, then you're going to get a diversified portfolio where maybe you're invested in 10 or 15 or 20 companies, and you get to follow along their journeys, learn from them, and benefit financially. Now, traditionally speaking, here's how venture capital works in this country: who can participate. Okay, the SEC says you have to be an accredited investor. And when I first heard that term, I thought, well, that sounds like some certification or something you have to apply to be a part of. No, 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 that's not even the case. An accredited investor is just a defined term that the government has defined as someone who either makes more than $200,000 a year or has a net worth greater than $1 million. So if you have an income greater than $200,000, and it technically says for the last 2 years, and you expect that to continue, then you're eligible to invest in, they call these private investments, like venture capital and angel investing and stuff like that. So that's all. You don't have to apply. There's no certification. It's just an income or net worth requirement. And so once you do that, um, most venture capital funds, they'll have a minimum investment, and it traditionally is pretty high. It might be $500,000 or something, but it was important for me to make that as low as practically possible so that we could bring more people in to start learning about it. So, it's hard to say, but if you do your research, different funds have different numbers. In my first fund, we accepted checks as low as $25,000 because we just wanted more women in the fold. We wanted more people, more women in the game to learn about investing, to learn about scaling companies, to learn about all this stuff. So we made it as accessible as possible with some other restrictions the government puts on us, so there's some practical constraints I have to work within. But, we wanted more people to get to participate. Another option that I'm seeing really popular right now is these things called SPVs. That stands for special purpose vehicles. And so, maybe you don't have 25 or 50 or $100,000 saved up to invest in a fund, but you can start dipping your toe in the water by participating in these SPVs. And what that typically is, at least for us, say we've already invested in a company and they're growing and they're raising more money, we might open up an SPV, and that's a chance for, again, it has to be accredited investor, so you've got to have that income requirement we talked about, but you can invest an even smaller check into these companies almost directly. So there are several different ways, but yeah, I mean, not to put a plug in for ourselves, but we're trying to do a lot of educational material on Instagram, on our Curate Capital Instagram account, so just to demystify the whole process, because it does look very opaque. It feels like a black box that's hard to understand, but it's really not that complicated. And as you start getting exposed to more, as you learn more, then you'll start to understand the game. And so, I think it's really important that we as women don't just sit on the sidelines because we don't understand something, but rather start investing in yourself, invest in your learning, and then you can, choose what financial investment is right for you. But we really have to be proactive in how we manage our lives, including our finances.
Yeah, I love that. And I love that concept of tying investing in yourself in a way that gives back. It helps you earn money for yourself. It also helps other women, other people succeed. There's so many elements to that I love. So I'll
That's right.
include links to Curate Capital and to your Instagram.
Mhm.
There is some fabulous information that you've included on your website. And so I really urge folks to check that out because it's great. Carrie, even though you have this amazing fund and you're doing incredible work to move the needle, there's a number of women, number of people out there who are also investing in female funded companies, but the needle's moving really, really slowly. Maybe talk about what more you would like to see or what more maybe listeners have, other ways that they could engage that would help move the needle as it relates to funding in female funded companies, female founded companies, rather.
Yeah, certainly. Yes, the stats just came out for 2022 and they're really abysmal. In 2022, women got 1.9% of venture capital dollars in the US. It,
That's even
it,
worse, isn't it?
it's
Isn't that
even worse.
worse
Yes,
than,
it's not even
oh,
that the needle's not moving; it's going backwards.
it's going
Yeah, it
backwards.
was two something last year. I think 2.4 in 21, and then last year it dipped to 1.9%, which is just so abysmally low. It's really hard to even comprehend. And so, you'll read a lot of people pontificating on this that, well, women aren't starting as many businesses. Well, that's false. All the stats show that women start almost half the businesses in the US. The number somewhere between, 40, 45+%. So it's not that there aren't enough female founded businesses. I think you have to go back to the source. And, there's also a problem with not having enough women writing checks, not enough women investors. If you look at the stats for venture capital, gosh, I should know this off the top of my head, but the number of female partners at venture capital fund is also abysmally low. It's something like less than 15%. Don't quote me exactly on that, but it's really low. And so, from my perspective, the real shift that needs to happen is we need to have more women investors. And so that doesn't mean just venture capital investors, but more women as angel investors, more women writing checks into venture capital fund. We have to change the face of what an investor looks like before we change the face of who actually gets funded, right? Because we all know there are all these biases that we can read about in psychology literature and that we learn about in school. But bottom line is people invest in what they're familiar with. They gravitate towards what they know. And so if you go into a boardroom filled with a bunch of homogenous looking people, they're probably going to be more likely to fund something that looks like them than something that's foreign to them. I had one investor, a male, who was considering investing in our fund, and I was showing him some of our companies, and he's like, but does the world really need another makeup company? We had just invested in Live Tinted. Well, now they just closed their Series A and raised another $10 million and have doubled year over year over year. And they just keep growing like phenomenally. And so, the point is, she had a very specific perspective on what the beauty space needed, and she's of Asian descent, and her company Live Tinted caters to darker skin tones, and she is just killing it in the marketplace. And that's the thing, is that we really believe at the heart of it, women know what other women want. Women control over 85% of the purchasing power in households. So specifically, that's why we're focused on consumer goods, because women are making those decisions. They know what they want, they know what their family needs, and they're buying those products. So, I think the change is more nuanced than just saying, well, gosh, venture capital investors need to send more money to women. Or it's also more than just looking at it as a cause that needs fixed, because then if you just go sprinkling money everywhere, well, you're not going to drive the returns. The answer in my mind is activating more women as investors. It's doing our diligence as investors, investing in the best of the best, and then letting that success drive even more investment, right? So it's kind of a long-term change that has to take place. But that's why I'm so super passionate about not just what we invest in, but getting more women educated on investing themselves, because that's how we're going to power change, and really move the needle on not only how money is invested, but who is wealthy in this country.
I'd love, Carrie, for you to pivot because we also have a lot of listeners who are entrepreneurs, who are starting businesses, who are maybe in the midst of a career pivot like you did, like I did. Maybe let's talk about what you look for as you think about companies to invest in and what those entities should be thinking about as they're making their pitch, maybe for the first time to a VC fund like yours.
Yeah, great question. I think there's all sorts of funding sources out there, from grants and loans and angel investors and VCs, that can all get kind of overwhelming and confusing. Even within the VC realm, different companies, different funds have specific investment theses. Um,
These-
sorry, I kind of fumbled
It's
that
okay.
word, but and
Good
what I
enough.
mean is they've got kind of a mandate of exactly what they invest in. And sometimes that can be pretty narrow. They'll say, we invest in this industry at this revenue level, this stage level. And if you don't fit those parameters, then it's not going to be a good fit for you. So sometimes, companies, I see founders reaching out to funds that are just already going to be a no, because it just doesn't fit their thesis. So as much as possible, do your homework to figure out who might be a good fit for you. Now, I still encourage people to reach out to me, even if maybe you're not exactly a fit for our thesis, which I'll share more about in a moment. But still, I'd love to visit with founders, because we can still connect you with resources or other investors or whatever. So on one hand, do your research and don't, just reach out to every investor. But for us specifically, feel free to reach out. And if we're not a good fit, maybe we know someone that is, or we know resources that'll help you get to that stage where we are a good fit. So at Curate Capital specifically, we're looking for revenue generating companies. I hate to put a firm number on it, but generally speaking, I want to see like more than $1 million in revenue in the last 12 months. So growing companies that are revenue generating, they found their product market fit, and now they're just really looking to take that capital and scale. And so that's just our thesis. There are other funds and other investors that will work with you from the beginning. They call it this pre-seed stage, or from launch or whatever, and they'll work with you in the early days to build your company. That's not really our sweet spot. Our sweet spot is after you've kind of already worked out some of those, uh, you know, issues in the beginning, and you've really are onto something good now. And now you know that capital will be like pouring accelerant on the fire, right? It'll just make the fire burn faster. We're not really coming in and fixing problems necessarily. You're onto a good thing, and if I just had more money, I would use it for X, Y, and Z, and that would really take me to the next level. And that's where we come in.
Yeah, yeah, I love that. So are you, as you have folks pitching to you, are you giving them feedback, giving them the opportunity, if maybe, no, this time, an opportunity to come back to you, to actually sort of work together to address those potential risks or issues that you identify that maybe they don't quite meet the requirements at that moment, but hey, come back to us in 12 months. Maybe talk about how that process works from your perspective.
Yes. So it's actually, we're recording this on the last day of the month. And so I was just looking at how many pitch decks we've received this month. And it's over 150 pitch decks that we've received in February, the shortest month of the year. So it's really incredible the number of, inbound pitches we receive. And, we're really honored that people are entrusting us with their ideas and, their businesses to evaluate from this perspective. The fact of the matter is, we can't invest in every business. I wish I had, $1 billion to invest and, there's probably would be no shortage of good businesses even at that stage. But the fact of the matter is with our first fund, we had $15 million and we write check sizes from, 500,000 up to say $1 million or so, because when we invest, we want to really, go all in, so to speak. We're not sprinkling small checks everywhere. We're becoming partners with you and we want a lot of skin in the game. So we're not able to reply to every pitch we get, but we do take a lot of pitch meetings. I bet we've probably had 30 pitch meetings this month with one-on-one with founders. And even like you said, if it's not a good fit for us now, we talk about, different resources we have to help you get to the next level. Or if it's probably not going to be a good fit for us, maybe the wrong industry or whatever, we know other funds and have other connections in the industry where we can refer you. And then lastly, something that I'm really excited about is that we're building what we call a founder toolkit, where even if, even if we don't take a meeting with you, even if we're not going to invest, even if whatever, we're putting together a pretty robust list of resources for founders that is built upon what we see founders needing when we meet with them. So whether that's help with their pitch deck or help with their financial projections or help getting their revenue up, we've really got a pretty incredible list of resources we've been working on for, a year now. So we're excited to roll that out in the next month or so to all the founders that reach out to us, and then also probably on our website and social media as well.
Yeah, I love that. So we talked a little bit up front about your career pivot. You were an investor in the company in which you were an employee, which enabled you to frankly cash out at a really young age and gave you the ability to decide to make a big career pivot. I'd love for you to talk a bit more and go a little deeper into that process, because you were also not working, but you were dabbling, maybe working. I'm not sure what the right term is, because you were an influencer, an early influencer on Instagram, which as I understand it, was part of what kind of got your attention about this idea of potentially investing in female companies. Maybe talk a little bit about the process that you went through to help make the decision about what you were going to pivot to next.
Yeah, even when I left the company where I worked, I had no clue what was next. But I'm a big believer at this point in life that nothing is wasted, right? I see so many young people wanting to pursue their passion from such a young age, or to be in their dream job, whatever that means, from a young age. But there's something to be said for just putting in the work and learning from it. You learn what you like, you learn what you don't like, you learn what you're good at, what you'd rather outsource. You learn your strengths and your weaknesses and all those things. So if you look at life as a learning experience, you can eventually craft that life that you love, that dream life, so to speak. But it takes a lot of just hard work. And so when I left oil and gas, I really didn't know what was next. Like I mentioned, had a few criteria. I like the entrepreneurial side of things. I like, kind of the startup life. I want it to be something that I'm personally passionate about. But it's just by putting yourself out there and learning. So yeah, coincidentally, I was on Instagram the week it launched, which is why I personally have a very short handle at Carrie C. Um,
Amazing.
yeah, I just personally liked photos, and I've always kind of had this creative bent in the background. So in the early days of Instagram, when it sufficed to just post a pretty picture, I was good at that. I'm not so good at the videos and all the things that you have to do to play the Instagram game these days. But all that to say that I was on Instagram early and grew when it was early or easy to grow. And through that, I've got not the hugest community by any means, but I've got a lot of loyal followers who have been with me for 10 or 12 years. And some even before that. That's another rabbit trail, I'll say for another time. But, so these ladies have been longtime loyal, connections of mine. And so I think because I never was trying to, make a quick buck and, push affiliate links on them day in and day out, they really paid attention to when I was doing this and trusted, where I was going with it. And also that's how I started connecting with brands. Sometimes I would work with them on an influencer collaboration and then go down the business path and talk to them about if they were looking for investors or not, or board members or whatever. And so, yeah, so back to your question about how to pivot, I think it's just becoming more self-aware of what you like and what you want. And then you can create that role for yourself. You don't have to have the perfect pedigree or education or experience. We're fortunate to live in a day and age where you can kind of learn on the fly in many ways, and really craft that life that you're going to love. And so, I certainly work, as hard or harder than ever, but I really enjoy the work we do. And it's so much more than, gosh, investing in 15 or so businesses thus far. It's working with this incredible ecosystem of women, from founders and, the women that work at these companies, and our investors, and the community that supports our companies. It's just also inspiring on so many levels.
I love that. I love that. You've talked about working hard. You've talked about really investing in your education. I'd love for you to talk about how you actually learned the VC space. I mean, you talk about the fact that you did a lot of research and you learned, but how did you go about that? Was there a process you went through? Did you make a list? Did you find people to talk to? Did you take courses? What did you do exactly that helped you really learn this space, or really, I guess, sort of round out the knowledge you already had? You had your MBA, which you got while you were still working in your corporate job, but maybe talk a little bit about the process that you went through for learning this.
Well, I'll start by saying that I learned on my own dime, right? As I was investing my own money into businesses, I was new to that, and in some cases, the founders were new to it. I was the first investor in a company called Pack Party out of Austin, and this was probably 7 or so years ago. And I was her first investor, and it was the first investment like this I had made. And so we joke now, the founder and I, Jordan, were very close friends, and we were both just learning together. I mean, we went through hell and back, personally and professionally, and some of it was nice and pretty and fun, and some of it was a little rough and a little um I don't want to say contentious, but learning is not always easy. So I was investing my own money and learning along the way. No formal courses or anything along the way, but I think we are fortunate to live in a time where you can learn so much by Googling, by reading, by there's a lot of VC buzz on Twitter. Twitter's not my preferred platform, but I'll go there just to read, like, what is the conventional wisdom that people are saying about the industry? What is the state of the industry? And then I think in many cases, though, it served me well to be an outsider, because as an outsider, you can learn about the industry and the traditional rules, if you will, but then you can figure out, okay, where do I want to challenge those norms? Where do I want to challenge the status quo? Certainly some conventional wisdom is there for a good reason, and we'll adopt that as it fits. But it's a good chance to go in and be like, but does it have to be that way? And how can we do things differently, better? How can we tweak things to fit today's generation, the female demographic? What can we do differently that's going to appeal to that customer, if you will, better than the traditional system? At the time, for instance, there were no VC funds that had differentiated branding or websites. If you were to go to a VC fund website, it was all in navy blue and dark neutral colors, and very serious fonts, and very serious names. And so when I came onto the scene, I mean, that's my background. I love color, I love marketing, I love branding, and so we kind of made a big splash with like hot pink and neon yellow and green as our brand colors. And now I'm seeing more of that. I'm seeing more VC funds try to differentiate themselves with unique branding and all that sort of stuff. But it was really kind of unheard of at the time, especially think of me going out to male investors with my, kind of hot pink pitch deck and all this sort of stuff. It was a little different. But I think that's one of the things that sets us apart. I mean, we seem more relevant and more approachable and just more friendly than the average venture capital fund experience.
Yeah, for sure. For sure. I mean, that's amazing. Carrie, maybe as you think back over the last few years and the experiences that you've had, and you talked about that first investment and how much you learned and how much the founder of Pack Party, right? Pack Party,
Yes, yes.
how much both of you learned in that process. Maybe talk a little bit about what some of those lessons were that you learned.
Yeah, yeah. Great question. I think number one is that building a company is not easy. It's not always going to be smooth sailing, and you're going to have hard conversations, and you're going to have to navigate both the ups and the downs together. And it's not a case where I write a check and walk away and can just hope for the best. We like to be involved, and the key though is being able to navigate those tough times with a lot of in my opinion, a lot of grace and kindness. I think that's missing a lot in the business world, and I really try to take the personal part out of it. I even try to take my own interest out of it. And when a founder is struggling, just ask, what can I do to help? Because ultimately, if they personally are doing better, their business is going to do better, and my returns are going to take care of themselves. So, I just look at it as helping these founders. And early on, I think I probably went in with, too much arrogance and thinking I knew, more about, X, Y, and Z than she did or he did. Well, not he, but founder one or founder two, you know what I mean? But I think going into things with a very humble approach and understanding that the founder, the CEO, whoever, they know their business better than I do. But I do have some things I can bring to the table. So, I just try to do regular check ins and ask, how can I help? And I'm not the expert on everything, but I do have a few key things that I can bring to the table. So it's been definitely a time of a lot of learning, and I think that's really what I love about this is just you can continuously learn and grow, and none of us ever have all the answers, and that's why it takes all of us together to kind of get to the desired outcome that we all have. So definitely a team approach, definitely taking a humble, how can I help you sort of approach leads to the best outcomes as I've seen it to date.
Yeah, I love that. I absolutely love that. So, as you know, influence is a theme that runs through
Mm,
this podcast. We talk about the how we can build it and sustain it through a lot of micro habits, and you just identified a number of them, right? Investing in yourself, investing in learning, investing in others, being open, having that mindset that's really oriented toward learning. I'd love, Carrie, for you to talk a little bit about how you think about your own influence and what it means to you at this stage in your career.
oh, thank you. Yeah, I did the influencer thing for, I don't know, 5, 6 years and the traditional sense. And by that, I mean monetizing it, doing paid partnerships, doing, a lot of affiliate work, all that. And that's fine. But I think that's a very narrow view of what influence is. And certainly some women have extraordinary social selling skills, and I applaud them. In fact, one thing I forgot to mention earlier is that almost a third of the capital we raised for Fund One came from influencers. So I love this trend that I think we're kind of,
Really?
yeah, and so segue, I'll come back to the question, but
Yeah,
as
so
I was
interesting.
personally investing, I saw how excited companies were to have me as an investor, and I'm not even that big of a deal on the internet. I say that tongue in cheek, but they were like, "Great, an influencer invested in us. We'll get a little bit more influencer marketing. We'll get a little bit more, knowledge in that realm, a little bit more exposure, all that stuff." And like I said, I'm not even that big of a deal. So as I was fundraising, I thought, well, how can we get this at scale? Well, ultimately, we had an influencer agency reach out, and they were wanting to offer their roster some opportunities to have equity, and this made perfect sense. So this core group of influencers invested over $4 million personally in the Curate Capital. And so I love this trend that I think we're seeing, and that even we kind of pioneered about influencers putting their money where their mouth is, so to speak, investing to grow their long-term financial picture, but also then if they want, they can use their skills as an influencer to benefit their long-term financial picture, right? As they help companies grow, they have ownership in those companies and ultimately will reap the rewards. So it's a pretty cool concept that we're really excited about, and we're just scratching the surface. I mean, there will be more to come for sure. So yeah, I think influence is so much more than using affiliate links on social media. I think for me now, my influence is very, very much less about selling things, selling products, and it's more so about just having the boldness to create a life you love. It's about sharing knowledge about business and investing. But for me, gosh, I'm in my late 40s at this point, and I think at this, we've accumulated enough wisdom that anything that I can do to help others, whether that's from the business perspective or just a personal perspective, really be able to take ownership and accountability for their own life and create a life that they're going to be happy to lead. I think that to me would be the ultimate, influence that I would wish to have.
Yeah, I love that answer. That's amazing. Carrie, this has been such a great conversation. I
Oh,
know
thank you,
folks are going to
Laura.
love hearing your perspective, and I'm really happy to have you here as part of this collaboration series that we've been doing with the Southern Sea. Thank you so much for joining me.
Well, Laura, I'm so honored. You are an amazing interviewer. I love listening to your episodes, and now I'm just privileged to be a part of it. So thank you so much for having me.
Hey friend, thanks so much for joining me today for this Encore conversation with the fabulous Carrie Colbert. I'd love to know what you thought of the episode and any topics that Carrie and I talked about that really resonated with you. So send that feedback and your comments my way. You can reach me through the website at shesaidpodcast.com or on social media. You can take a quick screenshot of the episode and send me a message. You'll find me at Laura Cox Kaplan on Instagram, Facebook, LinkedIn, and of course, Threads. Until next time, friend, you take care, and I'll talk to you again soon. And of course, remember, She Said podcast is a weekly production of She Said Media.